Thanks for clicking! The London and St. Thomas Association of Realtors, LSTAR, has released its data for the month of March, showing a real estate market shifting in the favor of the home buyer.
It's over for all of us.
Look.
And the data comes amidst a new report from RBC saying that buyers and sellers are facing a standoff, with more sellers entering the market, but buyers remaining budget constrained, with limited capacity to bid up prices.
I don't know what to do.
And, as we'll see, the London market appears to bear at least some of that out, with the market shifting very quickly in the favor of the homebuyer. With that said, the data comes amidst another widely cited report by RBC saying that homebuyers have never had it so tough, which might not exactly be the case. So what I want to do today is go over London's real estate data for the month of March, take a look at some of the shifts occurring in the market, discuss the report from RBC and London's affordability, and then go over some implications going into the spring market. What happens in London's market is going to be largely dependent on interest rates, and the Bank of Canada is set to make its policy rate announcement on Wednesday next week, with a press conference thereafter. We'll obviously have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features, and the benchmark price was up in March. The benchmark in February was sitting at $587,400, and that jumped about $15,000 to $602,700 in March. So the benchmark is up about $15,000 month over month, but only up about $10,000 since this point in time last year. And the average price of a home was up as well, though much more substantially. The average price in February was $604,113, and that jumped almost $30,000 to $632,971. So that's almost a $30,000 increase in the average price of a home between February and March, but the average price is only up 1.8% since this point in time a year ago. And the median price rose as well, though by not nearly as much. The median price, if you'll remember, that's where half as many homes sell over that price and half as many sell under that price. The median price in February was $585,000, and that moved up a little over $4,000 to $589,500. So the median price is up about $4,500 and only up about 1.6% since this point in time in 2023. With that said, although prices are up, homes are still selling for under asking in London. If we look at the sales to list price ratio, which measures by how much over or under asking a home sells, so if a home is listed for $100,000 and sells for $95,000, the SLPR would be 95. The SLPR in London in February was 98.9, and that moved up only slightly to 99.2 in March. So, on average, homes are selling for only about 0.8% less than their asking price.
That's why they pay me the big bucks.
And these homes still selling for under asking price could be due in large part to the amount of inventory coming to the market, especially relative to that of demand. If we look at the months of inventory measurement, the MOI, which measures if no more homes came to market, how long would it take for London to completely run out of homes for sale? The MOI in February was 2.3, and that moved up to 2.4 in March, up quite a bit higher than the 1.7 months of inventory we had last March. So, we have the benchmark price up about $15,000, the average price up almost $30,000, the median price up a little over $4,000. We have homes still selling for under asking, though less so, and we have more inventory coming to the market. With that said, similar to when we talked about Toronto, the real story coming out of London in March is supply and demand, or the sales to new listings ratio, which compares the amount of inventory coming to the market with the amount of sales. As we've talked about before on this channel, according to the Bank of Canada, an SNLR between 40 and 60 is an indicator of a balanced market, with a lower number indicating a market shift in favor of that of the homebuyer. London's SNLR in February was sitting at 6.3, technically a seller's market, but moved down to 54.7 in March. That's the lowest SNLR London has had in the month of March since 2015. Which, I think, most Londoners would say, was right before the real estate market started to take off, or at least our version of a real estate market taking off. Back then, the average price was $280,000. As a side note, that means when London's average price hit $823,000 in February of 2022, London's average price had tripled in a matter of 7 years.
Completely normal.
And the low SNLR makes sense when we look at the sales data, which are at their lowest point that they've been in London in March for the last 10 years. In contrast, the number of listings available, the number of active listings, are at their highest point that they've been since 2017. So yeah, that's a lot of listings available, and despite the decrease in fixed rates, we're not seeing the demand come back to the spring market, with demand at its lowest point that it's been in 9 years. So don't let anyone fool you when you're putting in an offer. You can and should have a finance condition. As we've talked about so many times on this channel, you can and should protect your financial future.
Stop saying it!
But are these lack of sales due to a lack of affordability? According to the RBC report, which was widely cited, and I suspect rarely analyzed, it's the toughest time ever to afford a home in Canada. Now, a very brief side note on this widely cited report, as this isn't the time to go over the report's problems, but suffice to say, the report says that home prices in Canada have only dropped 1.8% since their peak in 2022.
You are full of
Yeah, it's definitely an odd assertion, considering that according to the CREA's own data, the benchmark price has dropped by 16% during that time. See, RBC is using the RPS Home Price Index, which, for whatever reason, says that the benchmark price in Canada in the final quarter of 2023 was sitting at $796,000, which the CREA data, the data that, for better or for worse, we all use, puts that at $734,000, which makes a bit more sense. I don't think anyone would believe that home prices did this after the Bank of Canada raised rates in February of 2022. So RBC is using an index that says home prices are still relatively high, and then using current interest rates, and then noting that home buyers have never had it so tough. And the media buys it hook, line, and sinker.
And I have no more concerns.
Regardless, let's look at the London case. At the peak of London's real estate boom back in February of 2022, the benchmark price was sitting at $750,000, a decent 5-year fixed was 3.19, so homebuyers had to qualify at 5.25. Using RBC's requirement of a 35% GDS back then, homebuyers had to earn about $170,000 in order to buy that benchmark price home. Fast forward to now, and let's use a decent 5-year fixed rate of 4.89, meaning you have to qualify at 6.89, and Londoners now have to earn about $160,000, $10,000 less, to buy that same benchmark price home. Home buyers have to earn $10,000 less than they did in 2022 to get that same benchmark price home. Not a major move, but still not inconsequential, and not in the direction that RBC says affordability is moving. So, on the price front at least, for London, it's not tougher for home buyers to get into the market. Further, as mentioned, supply relative to that of demand is at its best point that it's been in 10 years. So, in March, in London at least, affordability was better, we had more inventory on the market, home buyers are seeing less competition, and that's not even to mention that homes aren't selling for 25% over asking like they were at the peak of the market in February of 2022. So, for London at least, this isn't the toughest market that homebuyers have ever seen. In fact, the market is quite a bit easier than it was at its peak. Still nowhere near affordable for the median household, but better than it was. So, homes are more affordable, but the March data shows that homebuyers are not jumping right back into the market. Maybe they saw what happened last year with so many predicting rate cuts heading into the summer, only to see all of those price gains that we saw running up to the summer disappear in the fall. With that said, with all of these listings on the market compared to the relative lack of demand, in March, at least in London, the real estate market shifted in favor of the buyer. Whether or not that will continue into April remains to be seen, but we'll obviously continue to track the data on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.